Good afternoon or good morning around Australia, and thank you for joining us today. My name is Helen Carvoso, and I will be your moderator. The COVID-19 situation and government response continues to evolve rapidly. Today, we wanted to provide some insights into the second government stimulus package and what this means for your business and your family. We will have a short presentation from Andrew Sykes, Business Advisory Director at RSM, and then have time for your questions. Can I please ask you to enter these in the Q&A box, which you should see at the bottom of your screen. And now I'll hand over to Andrew to talk about the second stimulus package.
Thank you very much, Helen. So we've had our second stimulus package released, and that is an update to the 12th of March. Could you just get that slide moved forward? Thank you. Right. So we are going to have a changing world, as Helen said. Our government is trying to provide stimulus to the economy to try and assist us through this. So the ATO is going to be the main way of delivery of these measures. We're going to see four key instruments from the ATO. We're going to have an instant asset write-off, the backing business investment, and the boosting cash flow for employers and supporting apprentices and trainees. We're going to run through each of these in detail. I will remind you, and just as a word of caution, that we are still yet to see the full legislation for any of these measures, and as such, we are cautious with how we approach them, and we recommend that you talk to your advisor prior to taking any decisions based on accessing these measures. We're also going to have a look at some of the other key initiatives available through the ATO and some of the other measures of support that we have. We're going to have some of those other measures supporting cash flow through ensuring credit through business loans, unsecured loans of up to $250,000, some other ATO measures, and there's also going to be some other support available through reduction in liability for directors for insolvent trading and personal stimulus. There is a lot to these measures, and RSM has a full detailed report which is available by going to rsm.com.au/coronavirus. That's our Coronavirus Resource Centre, and from there you can download our federal government economic stimulus package report, which gives you all the details up to date as at the 22nd of March. We'll now have a look at the first of those measures, which is the instant asset write-off. To be eligible for this, you must be a business entity, which means that you must have declared business income or going to declare business income and have an ABN. Your turnover must be less than 500 million, and this is up from the previous 50 million limit. Under this instant asset write-off, you'll receive an immediate deduction for eligible assets. Eligible assets are generally those you can claim depreciation on, and will exclude such items such as capital works, a number of farm and water facilities, and really any of those items that have their own separate concessional treatment under the Tax Act. The cost of the assets must be less than $150,000, excluding GST, and this particular measure applies to new and second-hand assets. The assets must be first used or installed between 12 March 2020 and 30 June 2020 to be eligible for the deduction. What that means is that even if you have contracted for an asset prior to the 12th of March, as long as it's installed and ready for use between 12 March and 30 June, you will still get a full deduction for the cost of the asset. Take the case of an example of a van that you may have purchased a van for your business prior to the 12th of March. You might have signed the contract on the 10th of March. If it's delivered, say, on the 30th of March, you're still going to be eligible for this concession. These assets are on a threshold basis, so multiple assets can be purchased. The example given by the ATO is of 4 conveyor belts of $50,000 each to be used in a business, and in that scenario, they have said that the entire $200,000 is deductible. We see this asset write-off being particularly beneficial for those that expect to pay tax in 2020. We're encouraging businesses to take full use of this. If you think you're going to have a tax bill, it's going to defer your tax until next year. We are encouraging assets to be purchased where you're going to see an improvement in productivity, savings in labour, or new product lines, recognising that the effect of this is going to be to provide you with a deduction, which is just going to defer tax that would be payable in May next year. Go on to the next, backing business investment. This is also must be a business entity to be eligible with turnover less than 500 million. Under this incentive, you're going to be entitled to claim 50% of the purchase price of the asset. Now, existing depreciation rules will apply to the rest of the asset. This is the one where there's probably most confusion on. You don't end up with 150% deduction. What you end up with is an immediate deduction for 50% of the asset cost, and the balance of the asset is depreciable under the normal depreciation rules as per its useful life. For this one, you must acquire the asset after the announcement on 12th of March 2020. So if you had contracted to or obligated to purchase the asset prior to 12 March 2020, you don't qualify for it. And it must be installed and ready for use by 30 June 2021 and will only apply to new assets. Unlike the instant asset write-off where there's an upper limit of $150,000, there is no limit on this one. So this will cover assets of any cost. We see this being beneficial for businesses expecting to pay tax in the next couple of years and wanting to bring forward deductions that would normally be spread over the longer useful life of the asset. If we just move on to the next one there. The one that's probably attracting the most interest is the boosting cash flow for employers. So back on the 12th of March, we had the initial announcement where this was a $25,000 concession through 50% of the PAYG that businesses were paying. The government has significantly overhauled this one in their announcements over the weekend. And what they've done is they've increased it to $100,000 back to businesses with a minimum of $20,000. This payment's going to be tax-free. And to be eligible, you must be a business, so you must have an ABN and declare business income and employ staff and turnover less than $50 million. Significantly in the update, the government has also included not-for-profits. So they will now be eligible for this incentive. This stimulus is going to be delivered through the activity statement system, and it's going to depend on whether you're a monthly or quarterly payer as to how you take advantage of this. So it's going to, the incentive will be delivered as a credit to your ATO running account on the lodgement of your activity statement. And it will be on the next activity statement. So monthly lodges, it will be on the 21st of April. Annual quarterly lodges, it'll be on the 28th of April. And the ATO has indicated that they will not include that credit or pay it out prior to the due date for lodgement. So the way it's going to work is that you will receive a credit. If we just go back up to that slide, just up to the previous slide there, you'll receive a credit, next slide, of 100% of the PAYG up to a maximum of $50,000 in your first payment. So that first payment will be in relation to the March, April, May and June months. And as I said, and we'll run through an example, it'll depend on how you do it monthly, whether you lodge monthly or quarterly. The second payment will be limited to the amount you're paid in the first payment. And for small employers, it'll be the minimum payment of $10,000 on the first in the first instalment and $10,000 in the second instalment. The first instalment, the first payments, as I said, are going to be made in the March, April, May, June lodgements. and the second one is going to be in the July through to October period. So if we just have a look at an example and we can demonstrate, it'll be a bit clearer when you see how it works. If we look at an employer with multiple employees who remits $15,000 per month in PAYG as an example, if they're a monthly payer, they will be entitled to 300% of the first month of the March lodgement as their first payment. So they'll lodge their March IAS on the 21st of April and be entitled to a credit of $45,000, which will be applied to the ATO running account. If this credit causes a refund, the ATO has indicated that they will pay that cash out within 14 days, but it's important to remember that this is a credit that offsets ATO obligations. It's not necessarily a cash payment. With that monthly payer, you'll see your credit of $5,000 will be applied when the April IAS is lodged, and then that will bring the employer up to the $50,000 credit cap. So there'll be no credit for May and no credit for June. The second payment is going to be limited to that $50,000, and it will be, as a monthly payer, it will be applied 25% to July, August, September, and October. So there'll be 4 even payments to be made as the second payment. For a quarterly payer, for the same $15,000, the PAYG obligation would be $45,000, which would result in a credit of $45,000 to the ATO running account. In the June quarter, the balance of the $5,000 to reach the cap of $50,000 will be applied as a credit. Now, as they're a quarterly lodger, the second payment, the first instalment of $25,000, will be paid in July, towards the end of July, and the second will be paid in October for a total second payment of $50,000. If we look at our next example, we'll see a smaller employer, and this will make some of those concepts a bit clearer. So this is a smaller employer who has a PAYG obligation of $5,000 per month. In the first month, which is their March lodgement due on the 21st of April, they'll receive 300% of their March PAYG obligation as a credit, which is $15,000. As I said before, if that credit results in a refundable amount, the ATO will refund that in cash or as a transfer to a bank account. A further credit of $5,000 will be applied to the running account in April, May, and then June. And over the total period of March through to June, BASs, there will be $30,000 in credits. The second payment will be limited to that $30,000 and will be paid in even instalments over July, August, September, and October. If we look at the same employer who is a quarterly payer, they'll have a PAYG obligation of $15,000 in March, and they'll receive a credit of $15,000 in March. They have the same obligation again in June. They'll receive the same $15,000 credit in June. They are similarly limited to the $30,000 second payment, and this will be paid in even instalments in July and October of this year. We'll be open for questions on this later on. The next incentive is supporting apprentices and trainees. To be eligible for this, you must be an employer business with fewer than 20 full-time employees, and you must have employed a trainee or an apprentice as at 1 March 2020. The subsidy is going to be 50% of the wages paid to the relevant employee, to the eligible employee, between 1 January 2020 to 30 September 2020. It'll be a maximum of $21,000 per eligible employee or $7,000 per quarter. Interestingly, if employers who actually re-engage or hire an out-of-work trade apprentice or trainee will be eligible for the subsidy. So if you didn't have an apprentice as at 1 March 2020, if you go out and hire one, you become eligible for the subsidy. There's going to be a requirement to register for this. We expect this to open in early April, and the final claims are going to have to be lodged by 31 December 2020. The coronavirus working capital scheme is a new subsidy or new stimulus incentive that's been announced over the weekend. So it consists of working capital loans for businesses with turnover less than 50 million. So the federal government has said that they will guarantee 50% of loans up to 250,000. So they will guarantee 125,000 of the $250,000 loans. These are going to be unsecured, and there will be an initial 6-month holiday repayment, but then they're going to be repayable as principal and interest over a 3-year term. The interest rate is going to be around the 4.5%. And our discussions with banks to date have said that there are going to be eligibility requirements. So you will have to make an application, and that will most likely depend on existing business performance. We just move that next slide down. There is some other ATO support available as well. There's payment deferrals, which apply to income tax, BAS, FBT, and excise payments. You need to apply to the ATO to get these and demonstrate that your industry has been impacted by the coronavirus slowdown. So in particular, this will very likely that it will apply to hospitality, cafes, gyms, clubs, all those businesses that have now required to be closed down. But you do need to contact the ATO and request the payment deferral, or your advisor can do that for you. Businesses on a quarterly reporting cycle with GST can move to monthly and therefore get GST credits quickly. This is going to have to be for a 12-month period, so it's the caveat from the ATO, and it also won't vary your PAYG withholding obligation. So you can still pay your PAYG quarterly, but you can get your GST credits monthly. The ATO will also allow quarterly payers to vary their PAYG instalments. So these are the instalments that you pay against your current year income tax. So you can vary these for the March quarter. And if you do this, you can request that the September and December quarters are also refunded. The ATO has indicated that they will waive any penalties if you do end up being taxable for the year. So it's an opportunity to get some tax you've already paid back from the ATO. They're also, on application, going to allow low interest payment plans and will remit interest and penalties incurred after 23 January 2020. As I said before, you do actually need to demonstrate to the ATO that the business has been impacted by COVID-19. There is also a range of individual support and supplements that have been released by the ATO. There is the coronavirus supplement, which is a $550 per week amount, which is payable on top of other benefits such as job seeker payment. You need to register for a benefit with Centrelink prior to getting paid, and there are a number of the registration requirements that have been either waived or reduced to facilitate getting access to that. There is also the early release of superannuation, which is in 2 rounds of $10,000 each. So if you can demonstrate that your income has dropped by 20%, or your hours have been decreased by 20%, you can access 2 payments of $10,000 tax-free from your super fund. And we are going to see a targeted stimulus payment to those who are currently receiving a benefit or become eligible to receive a benefit. The first payment is going to be towards the end of April, and the second payment is going to be in July. As I said before, there is a lot of detail on this. We've covered off on some of the detail, we've given you the major features there and run through a couple of examples. We do have our full report available at rsm.com.au/coronavirus. That's our Coronavirus Resource Centre. Download the report, and there is plenty of information in it. I think now we will be available for questions.
Thanks, Andrew, and I can see that we've had quite a number of questions coming through, so we'll get through as many of these as we can, and if not, we'll include the answers up on our resource centre later on. But a first question around an ASX listed company with a turnover of less than $50 million. Does this company still qualify for the $100,000 stimulus package?
As far as we can been able to determine, the criteria to be a small business entity is to turn over less than $50 million, to be a sole trader, a trust, a partnership, or a company. There is no distinction between a listed company and an unlisted company in this situation. With the caveat that I gave before that we are still waiting for the legislation and the fine detail, I would say yes, that it will be.
And Andrew, if staff are laid off, for example, casual staff, will they benefit from the weekly payment from Centrelink? And similarly for permanent staff, will they have access to specific payments, or will they also be the regular Centrelink payment?
They will have to go to either the MyGov website or to Centrelink, and they will have to register for job seeker payment. The waiting periods for job seeker payment have been waived. So you can go to job seeker, or you can go to Centrelink, get your job seeker payment, and then you are automatically entitled to the 550. So on average, that's going to look at if you had a single person receiving 612 as a job seeker payment, $612 per fortnight, they would be entitled to receive the additional 550. So they would end up with $1,162 per fortnight as a payment from Centrelink. Centrelink have advised that there's a lot of waiting periods. We've all seen the lines on TV. Centrelink have advised that they will backdate the payment to when you first register interest.
Thanks, Andrew. A business working with 3 contractors but no employees. Other than the items that you've listed, are there any additional benefits applicable for this type of company? For example, can we delay the third quarter tax instalments?
You can. The ATO has said that they will allow tax instalments. So if you're talking PAYG instalments, yes, you can defer PAYG instalments. So PAYG is those the PAYG tax that you withhold against your own current tax liability for the year. You can not only defer that, you can go back and request a refund for December and for September quarters. So you can get all of that back for the year and not have to pay March. You won't be having any PAYG withholding if you don't have employees. And the ATO has said that on application, they will defer payments for other businesses impacted. So if you contact the ATO, you should be able to defer your third quarter GST payment.
Andrew, we're yet to submit a 2019 tax return. Sorry, wrong one, sorry. Under the business backing investment, would a major component added to an existing asset be eligible? For example, an aircraft that underwent a major overhaul, which would normally be considered a capital improvement.
Now, that's a really tough question, but my call would be if you could normally depreciate it under Division 40 of the Tax Act, you will be able to be eligible for this instant asset write-off. So if it's an item that you normally depreciate, you would. Where really good distinction is having a look at a building. If you were to go and build a new building, the walls would be Division 43, so capital allowance, which is our 2.5% a year, but items such as the air conditioning, which would normally be subject to depreciation, you'll be able to get the instant asset write-off. So I think in this case, if it was a major overhaul that would normally be subject to the Division 40 depreciation rules, you're going to get the instant, or not the instant asset write-off, sorry, the boosting business investment write-off.
Thanks, Andrew. If the subsidiary turnover is less than $50 million, but the subsidiary is part of a larger consolidated group in excess of $50 million, is it eligible?
The ATO is saying that it is consolidated turnover. So you must be, I would knock that one out. That's once again going to be subject to the details, but they are saying consolidated at this stage.
If your PAYG is minimal, for example, $500 a month or $1,000 a quarter, will the payment revert to the minimum of $10,000 per quarter to a max of $20,000 over 2 quarters?
Yeah. So if you're an employer, so essentially for these purposes, what we're being told at the moment is an employer who's someone who pays wages and is registered for PAYG as of 12 March. If you don't meet the threshold, you get the minimum. So even if you don't withhold any PAYG, but you pay wages, and that does happen for some small businesses or businesses that rely on a number of casuals that don't meet the PAYG thresholds, you're going to be entitled to $10,000 on the lodgement of the March quarter and $10,000 on the lodgement of the June quarter.
And do passive investment entities that employ staff comply with PAYG withholding cash boost? For example, they might have significant rental and investment income declared in the tax return and employ a manager to coordinate all the properties and investments.
Very particular situation, this one, because we do have two conflicting signals from the ATO there. One is that they're saying that a business should have returned business income, but they're basing this off the PAYG withholding. I believe that there will be two distinctions. So to get the instant asset write-off and the backing business investment to accelerated depreciation, you will have needed to have declared business income for last year or show that you're going to declare it this year. To get the cash flow boost, I think it's going to be enough that you employ someone. So we are going to have a distinction between small business entities and business employer entities. So in this case, I would say as long as you are paying PAYG and you are registered to do that as at the 12th of March, then you'll be eligible for it. Noting, just as a side, that the ATO has already started issuing some advice around integrity measures, and it is the payment to related entities, so related parties. But if you had the arrangements in place previously, it all should be fine.
Thanks, Andrew. A question around, do we know what sort of evidence the government might ask for to prove that the payments have been used to support the retention of employees?
None that we have been made aware of. I think they are relying on employers to use this as a means of continuing employment. I do note that the second instalment is only available for ongoing operating businesses. So if you don't stay in operation, you don't get the second instalment. And it is reliant on not just the first quarter, but the second quarter and paying PAYG. But the government is not asking for any sort of evidence as to where the funds are going.
Do you have any advice for a startup business that's been halted by COVID-19? So is that startup business still eligible?
The startup business should still be eligible. What you will need to do is have your accountant contact the ATO. So we can contact the ATO for you. You won't be able to register for PAYG without actually calling the ATO, because they have halted that to stop entities registering just to get this. There is a process. You can demonstrate you're a genuine business and you're going to be employing staff and paying PAYG. You will get that.
Now we have a husband and wife who have 6 family-owned businesses. Are they eligible for one package as a family or 6 packages to assist each business?
It's per entity. So if you have multiple businesses who lodge multiple activity statements and remit multiple lots of PAYG, it's per entity. So it's any employer entity is going to be eligible for the boosting cash flow support, and each business entity is going to be eligible for the instant asset write-offs. So they're not going to be grouped.
I can see, so many SMEs operating through discretionary trusts or partnerships. How does the tax-free PAYG withholding refundable credits flow through tax-free to beneficiaries, assuming the trusts still manage to make a profit? Or does the tax-free refund only benefit companies?
It will flow through to the trust. It will potentially come through. You will still get a deduction for the PAYG amount, and the credit will come through as exempt income that you won't have to pay tax on. That's as close as we can get on that with the trust. That's something we're going to have to see the legislation. As I said at the start of this, the detail is important on some of these finer points, but that's how we anticipate that it would be treated. It's clear in the ATO correspondence that this is a tax-free credit, and we anticipate that will flow through to individuals. Companies will have potentially more of an issue in pulling it out, because as a company it'll have to come out as a dividend or a Division 7A loan.
Andrew, does the instant asset write-off apply to motor vehicles, and is the depreciation limit still in play?
ATO very clear on this, and yes, it does apply to motor vehicles, and yes, the depreciation limit of 57,000 is still the limit of the write-off.
And on the subject of assets, does this also relate to software assets, such as the purchase of an ERP license, together with any configuration or installation costs of that asset?
Answer to that would be yes, unless there is any other concessional treatment under the ATO or under the tax legislation. Software hasn't been specifically addressed, but going back to that guidance that if you would normally depreciate it under Division 40, it's going to be instant write-off.
And are these benefits available or applicable to businesses which made a loss in the last financial year?
Yes, they are. There's no restrictions or guidance around that, but it hasn't been raised as one of the eligibility criteria. Is that you have to be profitable. The references to last year are to determine if you were in fact a business and you returned business income last year. They haven't said anything about profitability at this stage, and are unlikely to.
And do we know yet, Andrew, how will the credits apply to weekly withholders of PAYG?
No, we haven't. We have had advice on the size of the business, so it is quite clear that you need to be employer business with an aggregate turnover of less than 50 million. Our understanding is that so you will be paying your PAYG weekly. You won't have to lodge or anything with the ATO. So on the lodgement of your quarterly BAS or monthly BAS, where you're actually declaring your GST, they will on there ask you for your wages and PAYG, and the credit will be derived from that. So depending on if you're a weekly payer, it's going to go on your GST activity statement cycle.
And is the distinction between monthly and quarterly lodges based on BAS or IAS?
That is our understanding at this stage is that it will be based on your PAYG cycle. So all the ATO has given us as guidance is activity statements, but then the government is basing the incentive on your payment of PAYG. So when they're saying monthly payers or monthly lodges, they're basing it on 300% of the March obligation or the PAYG for the entire quarter of January through March. So our view is it'll be based on your PAYG cycle, not your GST cycle, except for weekly payers.
Now, I can see that we have got a lot of questions still coming through. We are getting close to our finish time, but I will, keep asking a few more of Andrew, and also provide Andrew the opportunity to answer some of these which are coming through on similar areas. We will also ensure that we answer all of these and follow up with you afterwards, so that we can make sure we get all of these questions answered.
Yeah, that's fantastic. I'm happy to keep asking questions with the small caveat that I have a dentist appointment at 2:15 before they get closed down. There's one question that's popped there and says, as a primary carer, am I eligible for the coronavirus 750 stimulus benefit? If you are registered for a benefit with Centrelink at the moment, so if you're registered for carers benefit, you should be entitled to it. So that will depend on which benefits you're registered for now. We've included a list of those in our guide that's available at our coronavirus resource centre. And any other questions there, Helen, that you would like to pose?
I think we had a question about if we go into a total government lockdown, how do we go about lodging these claims and PAYG activities?
Well, fortunately, the accounting profession is very adaptable, and accountants have, so RSM is going to continue operating. Our staff are all going to be working from home, so all of this can be done through your accountant, who will continue working. So lodgements are still going to need to be made, and in particular if you want to get access to these benefits or these stimulus packages. There's another question there, Helen, that says, relating to instant asset write-off, max per item 150K, they've indicated a total per business. Did you say that example was max 200K? We have two items, one at 100K and one at 140K. Will these fall within the guidelines? It's based on a per asset limit. So both of those assets, as long as they're two separate assets, will be eligible. So you can buy multiple assets as long as each individual asset is less than the 150,000, excluding GST limits, credits, sorry.
And for the PAYG minimum payments, how do small businesses apply? Do they need to log on to the ATO portal and apply?
For the minimum benefit, it's all based on your activity statement. So if you need to lodge an activity statement with the ATO to qualify for that. So you won't qualify unless you're an employer business. So even small employers will be lodging a quarterly business activity statement, and eligibility and the credit will be determined on that lodgement on 28 April.
And are these measures available for companies on payment plans?
The measures are available to companies on payment plans, and the guidance we've been given is that it will be a credit to the ATO running account. That's the statement that's been made. So the stimulus payment will go into your running account. That in all likely consequence will reduce the outstanding balance. The advice we're giving to clients is to get that and then go back to the ATO and renegotiate the payment plan based on the now lower balance.
And with the second cash flow assistance, is it also a credit? And if so, will any refund also be rebated to a bank account within 14 days?
Yes, it's also a credit to your ATO account, and yes, it will be refunded if it leads to a refund amount being in the ATO account.
And if a business employs a person after the 12th of March, will they be eligible for round 2 of the small business payments?
Your round 2 eligibility, and once again, waiting for some real detail on this because it's quite confusing, this round 2 one. They're saying it's going to be limited to your first instalment. So the first payment that you become eligible. If you now go out and employ someone and pay them PAYG, that will be picked up in the March and the June BAS, and that will be the limit of what you're going to be able to get as a second payment.
And have we got any guidance yet on employers that don't have to submit an activity statements until the 29th of May because of bushfire impact? Do we know how the new measures will affect this yet?
We don't know how it will impact on that. My suggestion would be to calculate your GST obligations and what impact this is going to have. If you're going to be in a refund position, you can always submit your quarterly BAS early. If you're going to be in a payable after these credits, then you'll probably want to wait until the May lodgement extension. And then at that stage, so it'll be on your first lodgement after the end of March. If you have an extension in place, it'll kick in on that extension if you wait to the end of the period to lodge it. But if you lodge it before the 28th of April, it should kick in on the 28th of April.
And with regards to the cash flow incentive for employees up to $100,000, are you aware if there are any exclusions of this, such as listed companies?
Not aware of any exclusions other than the ones we've detailed of being a business entity and meeting the turnover criteria. There is another question that I've spotted there, and it says, we don't lodge any activity statements to ATO for PAYG as it's lodged through single touch payroll. Any idea on how we're going to receive the credit of 100,000? That's going to be on, our response to that is it will be on the lodgement of the GST. So you will still be lodging a monthly or quarterly activity statement for your GST. It will be on that basis. That's when you'll get the incentive calculated.
Andrew, we've got quite a long question here, but the ATO is suggesting that you won't be eligible for cash flow boosts if you've entered into or carried out a scheme for becoming entitled to cash flow boosts or increasing the amount. Does that mean if you start or if you decide to start paying wages in March, even though you've previously been registered for PAYG, that you are not eligible? And also, if you increase your staff's wages, is that also not allowed?
I think the ultimate answer to that is going to come down to who you're paying those wages to. The caveat that the ATO has put in their communications on the integrity measures is payments to related parties. So if you decide to increase your non-related employees' wages and pay additional PAYG, um, that's an arm's length transaction. The ATO should have no issues with that. If you are going to take an existing relationship or arrangement and change it to meet these criteria, it's potentially going to be a scheme and subject to the integrity measures. So, and they're really focusing on where there are related parties engaged by a related entity, and they were previously not withholding PAYG, and now they start to withhold PAYG. There's going to be some barriers to that.
And if a sole trader earns income under business income schedule but does pay wages, will they be eligible for the employee to the $20,000 cash incentive?
Yeah, it's a business employer entity can be a sole trader. So as long as you can't pay income and withhold PAYG on yourself, but if you have an employee, you will be eligible. And if you are below, if it's only a small amount of PAYG, you'll be eligible for the $10,000 minimum benefit in payment 1 and payment 2.
I'm just very conscious of time, Andrew. Are there any other, I can see we have some coming through on similar themes. Are there any other particular questions that you're able to address now?
I'm just having a look at this. I've got a question here. All what has been spoken of, can I find a resource about this on your website? Yes, we do have our guide on the website at rsm.com.au/coronavirus. And I believe we have a slide with that address that you could maybe throw up there for me, Helen. There's the website address there. There is full details there. And there is contact details on there, so you can ask any questions through that resource website, and we'll be available to answer more of your questions.
I might just ask one final question then, thanks Andrew, and as I said, we'll come back to you all. But Andrew, if operating as a trust with a sole working director, as in and not employing any staff, are there what would this person be entitled to claim other than accessing their own super?
They would be able to, if they're a business, they would be able to claim the instant asset write-off and the backing business investment. Unfortunately, as not being an employer, they wouldn't be entitled to claim the boosting cash flow. They would be, if their income does drop sufficiently, they could potentially be eligible for the coronavirus supplement, but that's something that they would need to address with Centrelink. And there was another question that I saw there, Helen, was does the income tax instalment refund for the September and December quarters only apply to quarterly lodges? Our advice on that is that tax officers said to contact them if you're a monthly PAYG instalment payer. So they've said yes for quarters, and they've said to contact them for monthly.
And perhaps then our final question that's just come through, Andrew, as a not-for-profit or as not-for-profit employees often have salary packaging paying less PAYG, is that less the refund of PAYG?
It's going to be based on calculated in reference to the actual PAYG withholding that you withhold and remit to the ATO in that BAS. So the salary packaging generally does reduce PAYG. So it's only going to be calculated on the actual PAYG that you calculate and remit in your BAS lodgement.
Unfortunately, I think that's all we've got time for, but Andrew has said we will be running additional webinars on related topics, and we will have the details of all of these on our Coronavirus Resource Centre, as well as the publication and other articles that Andrew has referenced. We will also make sure that we do have available a recording of this webinar and the answers and to some of the questions that we didn't get time to get to today. So thank you very much to everybody for joining us in this webinar today.